So one of the questions I get asked all the time is how to become a fund manager. What can I learn? What skills do I need in order to run a real estate fund? And I do find it kind of interesting because there's different people that get into it. You either have someone who's really good at the operations side, and maybe they've operated property and they've ran property, and they get into it, and then they might struggle a little bit on the more white collar, the financing, the putting it all together side, the structure of it. And then you have people who come from that side, which I see a lot. It's the people who come from the finance side. Maybe they were a broker or something. For them, setting up the fund and getting all the contracts in place, all of that is the easy part. But then they have to find the property and manage the property. I think the ideal situation is you kind of have a mix of the two. As a fund manager, you need to understand the numbers and the financing and the debt side of it, but you also really need to understand the actual investment, how to operate the property. When I was just starting out, we bought our first couple properties, and when we wanted to start a fund, we went the limited partnership route, and we went to the lawyer we used for the compliance on it. And he's like, hey, I want to have a meeting with you. And he brought his dad in, who'd been a lawyer his whole life, and he was an older guy. And he's like, hey, I just want to ask you some questions before you do this. And he's like, you have to understand that when you are going to switch from being a building operator to someone who takes people's money. And he's like, that's very different. You go from someone who's in the day-to-day, you're doing the rentals, you love that part of the business, to now you're somebody who's has a huge responsibility. You're taking other people's capital. You have to underwrite way more due diligently. You have to, understand every piece of it, the insurance, the debt, all of that. And for me, I always like the investment side of the assets. I love the day-to-day where you're in there, doing the renos and stuff, but I like the actual investment side of it, growing a portfolio, managing it, looking for when the exit is. That's what always appealed to me. So I always knew that we wanted to raise capital. And so it was a very easy question when he asked me that, but it's something everybody should think about. So I think when running a fund, the most important skill, and the skill that will, determine whether you're successful or not, is you have to have the ability to network and to raise capital. Because if you're not able to do that, it doesn't matter if you're the best operator in the world, you don't have capital to go out and buy the properties. There's no point in even having a fund. So that's the important one. And that can be hard if you've never done it before. I think it helps if you have a track record where you can show people, if you've done some real estate on your own, you can point to that and say, hey, I've already done this. Now I'm looking to get investment, and I'm going to go I'm raising capital, and we're going to start this fund. It's going to look like this. But the people skills, that's going to be, I think, the most important thing. You have to be able to network. You have to be able to clearly communicate what your fund does. So when you are trying to raise capital or to sell your fund to an investor, one thing, I got taught years ago was, a lot of times I personally, I'm so passionate about the real estate side of it. Like, I'll go on and probably just overwhelm people with stats or things about the company. And most of the time the investor doesn't really care. Like, they'll buy into the story or and then they just want to know what are they getting out of it, right? So it's like, hey, I put money in, I get a check for this every month. My equity builds by this amount. So for us, we pay out 8% distribution. They're part of the mortgage pay down. They're part of the appreciation. And you use things very simply, so anybody could understand it. I put this in, I get a check for this. You don't need to go into all these crazy real estate terms and things that you'll probably just lose someone or talk yourself out of it. So I think it's important to very quickly differentiate yourself from the million other people that are raising capital for real estate. Everybody's trying to do it. So, you'd come and you'd say, here's what makes us different, right? We spend a ton of time on the management. We have half the turnover as other companies. We take a lot of pride in ownership, and the investors get a big benefit from that. We pay out a distribution monthly so people can live on that distribution. We have tax benefits. We have depreciation because of the way it's set up. The depreciation eats up the income. And you can just give them just enough so they understand what, as an investor, they're getting out of it and what makes you different from everybody else that's doing it. So yeah, I think to be a fund manager, like we talked about, you need the communication skills, need to be able to sell the fund. But then to actually run it, to do the job, you need a couple things. One is you have to understand the asset. And if you come from the finance side and you've never ran real estate, you either need to partner with someone who has, or, find a really good property management company that can relay that to you. Because that's the big difference, in my opinion. Anybody or almost anybody can, they might know somebody with money and are able to raise the money and buy a property. That's not the hard part. The hard part is having that property run efficiently for 5 or 10 years and be able to exit it. So that's where I think a lot of the people who come from maybe the finance side would struggle. They're very good at getting the money together and buying the property, but it's the actual management side of it. So either you have to do it, for me, we've done every part of it. We've done the renovations, we've done the yard stuff, every part of it. So I have a pretty good understanding of what something should cost. And you can get out of that later on, but you need to understand the operation side of it or hire someone who's done it. And then, on the other side, on the finance side, if you're the operations guy and you want to be buying more properties and understanding the debt and stuff, that's something where you need to have a really good understanding of it, but you're going to have a broker generally. I would just pay that small amount, get a broker. You're never going to know as much as a really good broker will on where CMHC's at on their values and, what every expense is. So that's something that can be very helpful. The pro forma that you're going to have as the operator and the one that you're going to go in for financing probably will look different, right? And you need to understand that. So that's where having a really good broker, I wouldn't spend, years and years learning how to get financing for a property, because either your banker or your broker is going to do that for you. So personally, I think, the first thing when you're going to take other people's money, and this isn't popular, not everybody thinks the same way. I do believe that you should have some kind of track record, something that relates to it. Or you can say, hey, here, I've done these couple buildings. This is what it looked like. This is what we're going to do. Where I've spent, this much time learning about it. I run another business. I think it translates really well with real estate. So this is why I can do it. To have never done a deal or ran a business and take people's money is kind of risky, because you'll never know the things that you don't know, right? And that's going to be the majority of it. You're going to think you know everything and you're going to get into it, and there's going to be 20 things you never even thought of. So I think it is important to have some kind of experience before you do it. And the second thing would be understanding the compliance part of it, because that's where it gets really complicated. If you're going to set a partnership up, like a lot of people just throw something together and get a few friends and do an investment. Later on, that can be a problem. And that once we started our fund, when I went to do the limited partnership, I said, I don't want to redo this every couple of years. I want to set it up one time. We'll spend whatever money it takes to do it. And it was very expensive. But I want everything covered so we can grow this up to, this fund up to probably 150 million. That was kind of 100 to 150, and without having to ever restructure it. And you want to have all the compliance. You need to actually understand the compliance. That's something too, where like you can't just go out to the public or on social media and ask for money. Like you need to. I don't think people ever really get caught doing it, but there's ways you can do it that are compliant, and there's lots of ways that aren't. So unless you're a registered fund with like a REIT or something like that, you can't take. You have to have a pretty set criteria on the money you can take. It has to be an accredited investor or friends and family, and you're only allowed a certain amount of friends and family, and you're actually only allowed a certain amount of total investors anyway. So you can't really go out and raise money like that $2,000 or $5,000 at a time. It has to be bigger chunks, or you're going to run out of investors. So there's all these things, and that's where you can look up as much as you want, but just spend the money, sit with a compliance lawyer who understands it, and they'll be able to break it down really easy. Hey, here's what you can do. If you want to take registered funds, it's going to cost a lot more money. It's going to look like this. There's going to be a lot more compliance and regulation. If you want to take unregistered money, it's going to look like this. The setup cost is going to be this. And they'll kind of break that all down for you. And you can make the decision for yourself what you want to do. But I do think at any level, if you want to really scale in real estate, you're going to have the vehicle set up to take capital in, because everybody's going to run out of capital at some point if you want to scale bigger, right? Like if you just want to grow your own portfolio, you can do that. If you want to really scale big over time, I think you need a vehicle to do it. And that's where just have it set up properly from day one. So you're not going back 2 years from now and one of the partners wants out and you didn't set up a agreement properly, and now you're forced to sell the property. So I'd say, make sure you want to do it, have some experience, and just pay whatever it costs to get the right information and get it set up properly, or talk to people who've done it, right? People ask me all the time, and I'll always share, kind of how we set ours up. I'm not saying it's the only way to do it or the right way to do it. That's the way we thought was the most tax advantageous for our investors. So we like doing it this way. It's legal, it makes sense. So ask people, but get the structure right when you start. So one of the things to avoid when starting out, or that you have to be aware of, is it's always kind of that chicken or the egg thing. When you go out to start raising capital, the last thing you want to do is go put buildings under contract, not be able to raise the money, and then be in a bad position where you look bad for the broker. You have to let the deal go or lose hard money. And the other side of it is you don't want to raise a bunch of money and then, either be paying out interest or whatever, and not be able to find a building to buy and be forced into buying a bad building. So that's probably the hardest part, I think, of starting out. Is it's like, do you raise the capital or do you find the deal, and how do you kind of make it so that gap is narrowed? And I've had this personal experience tons of times where someone's like, yeah, I love it, let me know when you got the next deal, we'll put money in. And so you're kind of in your head, you're like, okay, this guy's got 100 grand or 500 grand, we're gonna, we'll be in that position when we go to buy something. And you go back to them and, life happens. So maybe they put it in another investment, or their business isn't doing as good as they thought, or they got a divorce, or whatever the case is, and that money's not there. I think you need to have very strong commitment from people, or maybe you raise the money and tell them, we'll use, if we don't use it within 6 months, we'll be giving it back. Do something like that where there's the money's there before you put something under contract. Or maybe, I guess probably the perfect situation is you actually have enough money. Maybe you have 200,000 and you want to buy a $1 million or $2 million property. You have enough to do it yourself if nobody else comes in. And if you raise 100, you put 100 in and you got enough. Or if nobody comes in, you just buy the building and then you can raise money for the next deal. But I think it's not a great look. Like, people always talk about, oh, go get the deal and the investment comes. I mean, I haven't seen that happen for a lot of people, and I've seen a lot more people put stuff under contract, not have the funds, and have to let the deal go. It ruins your reputations with the broker. The seller, if they're a big seller, maybe they got a couple thousand units they're selling off, they're not going to sell to you again because they don't want to waste that time. So make sure you have the funds, or really strong commitments before you put something under contract. Yeah, I think one of the biggest things with raising capital or getting the deals, it is going to be your reputation. And when I first moved to Edmonton, I came from a town of a couple thousand people, and this was a big city of 1 million. And I remember, one of the first people I talked to said, "Oh, it's actually, the real estate community is very small in the city, for sure, at a higher level." And I remember kind of laughing, and in my head, I'm like, "Yeah, there's no way." And you get into it, and you realize there's only a couple of the top realtors, a couple of the brokers that do all the deals, right? There's only like 3 or 4 landlords do own the majority of the real estate in the city. There's lots of other ones, but if you want scale or whatever level you're at, there's going to be the top people. And if you ruin your reputation with those people, it's very hard to get deals. We've seen it where, went to look at a deal, and I'll ask the broker, like, who else is going to bid on it? And he'll be like, well, I know this person is, but they probably won't even consider their offer because, they always retrade, or they don't come through, or they've let a bunch of deals go. So that reputation is very hard to get rid of, right? You have to close on deals, even on the first couple. If there's something you want to retrade with over a small amount, like maybe you just eat that to save your reputation. Because I think it's so important. And same with investors, right? If things will always go wrong in investment, and if they go wrong and you handle it properly, people are going to understand that. But if there's so many people that are actually scamming out there, and that's something where you do that once, and I think your reputation's gone, or people hear something about you being shady in another business, and now you're trying to do this and raise capital, I think it's going to be very hard. So your reputation is so important when you're raising capital, and on the real estate side, on getting the deals, finding the deals. I think you can't put enough emphasis on your reputation. So hopefully, you guys learned a little bit about some of the skills it takes to be a fund manager. Like I said, I get asked all the time, and I always try to answer people that should give you some information. We'll continue this topic on other episodes as well. So thanks for listening today. We'll see you guys next week.